Let's talk about one of the most overlooked but absolutely game-changing habits in trading, keeping your charts clean. This might sound simple, maybe even trivial. But trust me, what we're about to discuss is one of the silent killers of trading performance. If you've ever stared at your charts and felt overwhelmed, confused, or paralyzed by conflicting signals, this episode is for you. When most traders start out, they're hungry for certainty. They want the secret. The perfect combination of indicators that will predict the next move, the holy grail that says buy now or sell now, without hesitation. So what happens? They load their charts like a Christmas tree: RSI, MACD, Bollinger Bands, Fibonacci levels, moving averages, stochastic oscillators, Ichimoku clouds, all stacked one over another. At first, it feels empowering. The chart looks sophisticated. You feel like a Wall Street pro, a digital cockpit of data right in front of you. But then comes the reality: nothing lines up. The RSI says overbought, the MACD crosses bullish, Bollinger Bands widen, stochastic says wait, and you freeze. You've just entered what traders call analysis paralysis. You've got so much information that you can't decide anything. The irony? Most of the world's top traders use far fewer indicators than retail traders. They don't rely on the tools, they rely on the price. They read it like a language. Bruce Kovner once said, "The most important rule of trading is to play great defense, not great offense." That's not just about risk management, it's also about mental clarity. You can't defend your capital if you can't see the market clearly. Clean charts are like a clean mind, uncluttered, sharp, and focused. Let's unpack why this matters so deeply. When you keep your charts clean, three things happen almost immediately. First, clarity and focus. You begin to see price action for what it is, the pure reflection of market psychology. You can identify trends, patterns, and key levels of support and resistance without the fog of conflicting indicators. Remember, indicators are just translations of price. So why read the translation when you can study the original? Second, you reduce cognitive load. Your brain can only process so much data at once. Too many visual inputs drain your mental energy, making decision-making slower and more error-prone. Trading, especially intraday trading, demands speed and confidence. If you're second-guessing your setup every few minutes, the opportunity's already gone. Third, you become consistent. A minimalist approach forces you to focus on the core of your strategy, not on a dozen secondary confirmations. The fewer moving parts you have, the fewer things can break. And fourth, and this is a big one, your emotional control improves. You'll be surprised how much calmer you feel when your workspace, your chart, and your signals are clean and minimal. Stress and confusion lead to impulsive trades. Clean charts lead to calm execution. Let's anchor this idea in a real-world story, the case of Tom, a Forex trader who learned this lesson the hard way. Tom had been trading the euro to US dollar pair for years. He was smart, disciplined, and genuinely passionate. But his results? Inconsistent. He would have one great week and then 3 losing ones. His problem wasn't strategy, it was clutter. His charts were buried under indicators, Bollinger Bands, 3 moving averages, MACD, RSI, stochastic, ATR, and a rainbow of trend lines. He thought this made his analysis more accurate, but in reality, he was drowning in contradictions. He'd spot a setup, but then one of his indicators would say don't enter yet. So he'd wait. The price would move in his direction, and he'd get frustrated, enter late, and lose. The cycle repeated. Eventually, Tom had enough. He decided to go back to square one. He wiped his charts completely clean, not a single line, not a single indicator. For the first week, he did nothing but observe. Just watched how price moved. He began to notice things he had missed before: how candles behaved around key levels, how momentum built and faded, how markets consolidated before breaking out. Price wasn't random anymore, it was telling a story. After 2 weeks, he started adding back only what he needed. A 200-day moving average to show the long-term trend. a 50-day moving average to show the shorter trend, and the MACD to measure momentum. That was it. 3 tools. No more. Then he split his analysis into timeframes, daily charts for the big picture, 4-hour charts for execution. Suddenly, everything clicked. Within a month, his performance changed dramatically. His entries were more confident, his stop losses tighter, his stress level lower. He wasn't reacting, he was anticipating. By decluttering his charts, Tom decluttered his mind. Now, here's the kicker: a few months later, he revisited his old charts out of curiosity. The messy, overloaded ones. And he realized something profound: almost every good trade he'd ever made was obvious without the indicators. It was visible in the price action all along. That realization changed his career. So, what can we learn from Tom? That simplicity in trading isn't weakness, it's mastery. You don't need to abandon indicators completely. They have value, but they should serve your analysis, not dominate it. Think of them as assistants, not decision makers. A good rule of thumb? Use no more than 3 or 4 complementary indicators, each serving a distinct purpose. For example, moving averages to define trend, RSI for momentum, and volume for confirmation. That's a complete toolkit. And periodically, review your setup. If you find yourself relying on an indicator less and less, remove it. Markets evolve, so should your tools. Another tip that professional traders use: start every new analysis with a blank chart. Don't load your saved templates right away. Just observe raw price first. Draw your key levels, spot trends, and patterns. Once you understand the structure, then add your indicators. This process grounds your analysis in the market's reality, not in the indicator's interpretation. And for those who love drawing tools, trend lines, Fibonacci retracements, channels, use them sparingly. Too many lines can distort your perception just like too many indicators. Identify the levels that actually matter, the ones the market respects, and discard the rest. Remember, your job as a trader isn't to decorate your chart. It's to interpret it. There's a psychological dimension to all of this too. Clean charts promote discipline. When your environment is orderly, your behavior follows. The same principle applies in trading. Visual simplicity encourages mental composure. You execute your plan, not your emotions. And if you ever doubt this approach, look at the desks of institutional traders. You'll rarely see more than 2 or 3 charts on screen, often with just price, moving averages, and volume. That's it. George Soros once said, "The markets are constantly in a state of uncertainty, and money is made by discounting the obvious and betting on the unexpected." To see what's obvious, your chart must be simple enough to reveal it. So let me ask you this: when you open your charting platform, do you see the market, or just a mess of lines and colors? If it's the latter, here's my challenge for you this week: strip your chart down to bare price. Trade for 1 week with only price action, support and resistance levels, and maybe 1 moving average. You'll be amazed at how your eyes start to pick up patterns naturally. And I want to hear from you. What's one indicator you could remove from your chart right now without losing clarity? Share your answer in the comments down below, and let's discuss how simplification can sharpen your edge. Because in the end, trading isn't about complexity, it's about clarity.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.